If you didn't buy a house during the last recession, what were you doing? Today's side quest, the Glass Eye. We're going to be talking about the 2008 financial crisis, and we're convinced that there is one thing that caused it. The historical and cultural emphasis of homeownership is a key component of the American dream. Post-World War II policies like the GI Bill and government-sponsored entities like Fannie Mae and Freddie Mac made homeownership accessible to millions. Culturally and politically, owning a home was seen not only as desirable but also a sign of success and stability. Following the dot-com bubble burst and 9/11, the Federal Reserve lowered interest rates to nearly 1% to stimulate the economy.
I remember when I was applying for a mortgage and they came back to me and they were like, you misstated your income or whatever. And I was like,
Oh, they were that strict?
yeah. They were like, we got to audit everything.
Oh.
And then I had $5,000 in a random checking account that I forgot about. So I moved it after I had already provided bank statements and everything. And they were just like, what are you doing? Where did this money come from? To have the paperwork and the paper trail and everything. And I was like, geez, it's $5,000 and it's just going to pay the loan. So like, why do you care where it came from?
Lower interest rates made borrowing cheaper, encouraging home buyers to refinance. As demand for homes surged, lenders looked for ways to approve more borrowers. The growth of the secondary mortgage market meant that banks no longer held loans they originated. Instead, they sold them to investors. The focus shifted from ensuring the borrowers could repay to simply closing more loans. Between 2004 and 2006, subprime lending tripled, and lending to borrowers with weak credit histories became normalized. What's the worst credit score you've ever seen?
In real life, mine, I was pretty low. I don't remember how low I got, but it was like high 400
Do you think you could have bought a house?
back then.
Yeah.
Well, that was 2009, so the market was still kind of screwed, so probably.
You would have been a prime target.
Yeah. So they were basically like, no income, no job, no problem. These became known as liar loans because of how easy it was to inflate income figures. Lenders accepted absurd income claims from borrowers such as janitors earning $12,000 a month.
You've seen The Big Short, right?
Yeah.
That's like, you know the guy Schmidt on New Girl?
Yeah.
He looks at Steve Carell and he's just like, I call them ninja loans.
It's insane.
Sorry, my Zyn pouch just fell out of my mouth. Mortgage brokers and loan officers were incentivized by volume. The more loans they processed, the more they earned. Investment banks bundled these loans into mortgage-backed securities, effectively hiding the risk through diversification. This created a system where everyone up the chain ignored the quality of the underlying loan. Yeah, that's like what happens when I give out pieces of gum.
Yeah.
Or I'm like, I have this really cool package of gum. Here's the one that I actually sat on for too long and that fell out of my pocket. So it's been sitting in my butt for 2 weeks. And they're like, can I have a piece of gum? You're like, yeah.
Yeah, absolutely.
We have a pretty big claim that there's one thing that caused the crash. Do you think you know what caused it?
If I say it, we might get demonetized.
Say it.
As Kanye always says,
Oh, God.
it's either that joke or
From 2000 to 2006, national home prices rose by approximately 85%. People began to believe housing prices could never go down, reinforcing the cycle. Prices will never go down. As interest rates rose, many adjustable rate mortgages reset to higher payments. Borrowers who had inflated their income couldn't keep up, leading to a massive wave of defaults. So that $12,000 a month janitor kind of got screwed over.
when I bought my house, the person, so I'm only the third owner of my house since it was built. They sold it to the previous owner in early 2000s, just after 9/11. She bought the house for $60,000.
No way. What?
Or something. This woman comes out of her house and was like, my house is for sale. You want to come see it? When I asked her how much she was asking, she was like $175,000. And I was like, trying to keep, play it cool, keep my cards close. And she was like, I'm afraid that's too much though. I don't think it's going to get appraised for that much.
You were like, oh no, it's okay.
So we landed that house. It's not a good market to sell because I have a 2.5 interest rate. I basically got to die with this house. By 2007, delinquencies had doubled.
That kind of reminds me of like the car market right now. I saw this video of a guy who like tried reselling his Hummer EV, and he bought it when it first came out in 2022 for like $200,000. And then he tried selling it back, but he bought an Audi R8. And so he still owed the leftover debt he had for the Hummer and the new payments he had for the Audi. And he was like, I don't know what to do, but I'm thinking about getting another car.
Oh my God. Well, that's like I tell all my friends. When in doubt, when things aren't working out, double down. When doubling down doesn't work, triple down.
Triple down.
And when tripling down doesn't work, you quadruple down.
Because MBS had sold worldwide, banks and investors across the globe suffered losses. Global credit markets froze as no one knew who was exposed. The root of the crisis wasn't just Wall Street greed or investor appetite for yield. This is what caused the crisis. It was the foundational assumption that borrowers could repay their loans, an assumption that was never verified. So you know how you got audited?
Yeah.
They did the opposite. They said, you have $1? Sick. I'll tell the bank you can afford a $500,000 home.
Seems legit. If there's a will, there's a way, you know? Had loan officers been required to verify employment and income, millions of loans would never have been approved. The artificial demand would have been limited and home prices would have remained stable. The cascade of defaults and the subsequent financial meltdown could have been prevented or greatly reduced. This wasn't just a few bad actors, it was systematic. A single form, income or employment verification, was ignored nationwide daily for years. The crisis was built on unverified promises.
Some people think I'm a monster like you, Mr. Carell, but the world sees me as valuable.
The fact that people were just going around saying, nah, I don't give a shit. Take this home. I don't care how much money you have. And I don't care if you can repay back your loan. What did they expect was going to happen?
Why would you bet against housing? Housing is so stable. Blah.
In response to the crisis, Congress passed the Dodd-Frank Wall Street Reform and Consumer Protection Act in 2010. Lenders must now verify income, assets, employment, and credit history. It took global economic catastrophe to, just make people verify that you can afford the thing that you're purchasing.
I feel like we're lucky. I definitely lucked out on getting a house. I'm very grateful for it. And you lucked out on getting a house.
It's true.
Because you screwed that woman over for amazing deal. But what about other people? They don't share the same sentiment. Okay, while the reforms reduced fraud, they also made it much harder for self-employed and gig economy workers to qualify for loans. Please subscribe. Please. Many low and middle income families are now locked out of homeownership, even if they are financially responsible. In today's market, prospective tenants often face extremely invasive vetting processes. So it's not even just like buying a home. And it's like renters must provide pay stub, employment verification letters, bank statements, and more. Landlords frequently require renters to earn 3 times the rent or more. It's like people who are trying to rent anywhere.
The absence of verification helped create the worst financial crisis in generations. Overabundance of verification is now contributing to a new crisis, a lack of affordable, accessible housing. The true reform balances responsibility with flexibility. Verification matters, but it must be reasonable, not paralyzing.
So if you're one of those people who owns houses, be quiet and just let them live there for like $800
Yeah.
a week. All right, bye. I'm just kidding.
And one thing I've heard is like, you know what takes up a lot of land in a lot of cities? Golf courses.
What?
Golf courses take up a lot of land, not cumulatively. I mean, this is America. And if you take away my golf courses, I swear to God, I'm going to lose my mind. Smash and grind that like button and spank the subscribe.
Holy crap.